of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for the TFNN Futures Hour. If you have any questions, you can call in at 877-927-6648, and I will do my best to try to answer them for you. On today's show, I want to definitely talk about the one that we've been watching and waiting for a long time, and that's the Treasury bonds. We're getting closer, so we need to focus on that. I also want to talk a little bit about some of the work that Larry Williams did on the theories of runs and the probabilities of markets moving in certain directions. And then I want to talk a little bit about what's happening in some of the other commodities, because we've had tremendous amounts of selling coming into some of these things, and especially gold and silver, because we've been warning our listeners all along that there's something wrong, and now we look like we have a really good chance of making that target in silver. But let's start out with the Treasury bond market, folks, because in the Tiger TV, I posted the 30-year long-term chart in Treasury bonds. It shows you that interest rates have been going down decade after decade over the past 3 decades. Rates have been, as cheap as they can get. Money is very, very inexpensive. 30-year mortgages now are under 4%. And, we're at the end of this cycle based on the technical analysis that I can see. This is a perfect textbook case of a market that's been in a long-term channel for a long time. It's almost in bubble fashion. We're looking for a possibility of another 7 or 8 points up in the Treasury bonds, and that could be based on something that's happening out of Europe. I'm not sure, but we've got this lunar eclipse, and we've got this full moon coming in over the weekend. And, as I've said many times, I'm expecting some really big moves, even bigger than what we've already had, coming in, into Monday. So we'll have to figure out how to, take advantage of that on the short side, of the stock market. But frankly, I think that bond trade is going to be very similar to the short side of the Treasury. The short side of the Treasury bond market will be, basically being short stocks too, because pretty soon people are going to realize that Treasury bond is not really a flight to safety or a flight to quality or a safe haven or anything, because it's nothing more than a piece of paper, and that's nothing more than what they've done in Greece and Iceland and all these other places. It's just paper, folks, and believe me, the outlook on the way people think about paper can change very dramatically if they think they can't get their money back. And I think this is the mistake that the Fed has made by keeping rates so low for so long and allowing people to borrow money that they shouldn't have been able to borrow money. And now eventually this is going to have to be placed back. Now, there's going to be 2 charts into the Tigers TV today. The first one is the longer-term bonds, and then the second one is the same chart. But what I have done is I've shaded in the butterfly patterns that is the characteristic of my trade of the year, which this is what we're looking at. And if you'll look at this butterfly pattern, you'll see 5 of those over the past 30 years. And this is by far, one of the nicer ones that we've had. We also had the 2009 was our trade of the year, and the bonds dropped, well over $30,000 in a matter of 3 months in the 2009, trade of the year. So now we're coming in to the one where we'd like to get these bonds up to this 150 level. Now, something very significant is happening here for those of you that trade commodities. First of all, when a market goes up, puts are supposed to go down. And when markets go up, calls are supposed to go up. But what's happening now is that the relationship between the puts and the Treasury bonds is getting rather scary here, because even when the Treasury bond market goes up, the puts don't move very much. In other words, they should be dropping in price as Treasury bonds go up, and yet they move very, very little. To me, that means there's a lot of selling coming in, and we have a huge amount of people in the Treasury bond market now with a large open interest, just like we had in the silver and just like we had in the gold back in April when silver hit that $49 level. We had the same situation there. So this is ripe for what we call a major reversal coming in. The pattern's going to be complete here very, very soon, only about 7 or 8 more points, and that's what we're going to be ready to do it. You remember one of the old famous quotes, just be careful, because some of God's greatest gifts are unanswered prayers. This might be one of them, because this pattern looks so perfect that if it does fail, interest rates could go to zero, and this would be a bad trade. But frankly, we would not have to risk very much on this, because if it gets above 153, I would have to say that the trade is definitely wrong, and we're going to be in the same situation that Japan is in, with zero interest rates for maybe 10 years. They just won't be able, the people just won't be able to borrow any money, but rates will be relatively low. So this is a trade that we're watching. Everything is setting up really nicely for it. So all we're doing now is to wait and see if we can get this last little move up. Now, I'm expecting it to happen sometime in the next 8 to 10 trading days. It might happen over the weekend, or it might start that parabolic move of the last 7 or 8 points in Treasury bonds up into that 150 level. That's my anticipation. I don't like to use the word hope, because that's not a very good trading word, but the anticipation is that what we're looking for, in the Treasury bond market. The stock market has sold off quite a bit, based on just the slightest bearish news coming out of Europe. So you could imagine what will happen if something really bad happens, that they can't agree on anything over the week. Not as insignificant to us, because we're technicians. We're basically looking at just what the prices are supposed to be doing. So we have some really strong numbers set up here in the euro, and that's at 132 in the euro. If we get below that, we're going to be looking at something far more sinister in the euro, and that's what we've been thinking all along, just by looking at the technical part of the picture. Because if you look at that, it shows that just on a short-term basis, we can make the 125 level very easily by looking at the weekly chart that I put into the Tiger TV, because that's nothing more than the 786 off of the the May and June lows, and if that one breaks, then you're looking at the lower low at the 1 to 18 level. So this is what we're looking at as far as the euro. If it gets below that 132 level, over the next day or so, that's most probably where we're going to go. And the other thing I want to mention is start to expect extreme volatility, even more than we're having now. We've had these 400-point swings in the Dow, and I think we're going to be seeing more swings, even more violent than that. And whether they could be to the upside or downside, is a coin toss. But because markets go down faster than they go up because of fear, the probability says that if you're going to have a bigger expansion, it would be to the downside. So, that's what we're watching. The two main things today, to focus on are the fact that this euro is at such a critical level, and also that the bonds are reaching up. And John, you're still with us, correct?
I am.
Okay, now for those of you that are listening, I'm just going to give you my opinion. This is, quite a long time I've been in this business, but when you're looking for a brokerage firm, you want to try to find one that has a very good reputation of returning to people's money. That's the main thing. If you look at these Chicago mercantile firms, like F. Stone and R.J. O'Brien, also Rosenthal Collins. I mean, I know Les Rosenthal. I know the O'Brien family. I mean, there's a dozen of them on the floor that were trading at one time. And these folks have skin in the game. They're very honorable. The problem is what happened with Corzine is that he broke all the rules. MF Global used segregated funds. They still have not been returned. They say they're being coming into accounts. I happen to know, several people that have a considerable amount of money. They have not received a dime yet, and so that's the problem. What I was most surprised about, John, was the fact that the Chicago Mercantile didn't step up to the plate when this first happened and make everything good, and to make all the member firms come up, and they've made a fortune, in the memberships, since 1980. My membership in 1980 was 109,000, and they were at 5 million at one time. So these fellows have made a great deal, and they should have made that money good right away, and then fight to get it back. But that did not happen. And so we're left at the mercy of what's going to happen. And the CFTC is basically, it's just not strong enough to get some of this stuff done, and now Corzine is up against his buddies, telling him, what he did wrong. And if I was Corzine, the first thing I would say is, fellas, you know what? I learned a lot while I was in the Senate, and I did the same thing in the Senate that I did at MF Global, and look what happened.
Yeah, Larry, the most troubling aspect of this whole affair, as I see it, is the very fact you touched on it with the Chicago Mercantile Exchange. In addition being an exchange transacting client orders, of course, it's a clearing firm. And that responsibility legally, so they say, is for the clearing firm to stand in between both parties. And in the event that one party fails to perform, it's that clearing firm that steps up to the plate. And of course, they've done exactly the opposite. They have not taken that role, that function, and for 100 years, that's what they did. And the fact that they're not doing it now 100% is, to me, quite troubling.
Yes, it was since 1835. Is when they those exchanges. I believe that's when the Board of Trade began, and it's very troubling, and it's very important. And we're coming into a time that is very reminiscent of what happened in 1987 when we had the crash, because that was as close to I have ever seen in my years in the business of the markets actually melting down. If it hadn't have been for Greenspan, and that's when they formed the plunge protection team. What Greenspan did is he told all of these major banks, Goldman Sachs, J.P. Morgan, UBS, he told the foreign banks, he said, open the windows to the Federal Reserve. You can borrow money at zero, but the market stops going down now. Just start buying stocks. That's what he told them. That's what they did. That was the bottom. And, whether they're going to do that again or not, I don't know. But this is very troubling. To me, it always has been, here, what happened with MF Global, because this clearing function should have worked, and it did not. And, that's the problem.
Thanks so much for your time, and I appreciate your good efforts.
Okay. Yes, thank you, John. But all I can tell you, folks, is to try to keep your money, someplace that is relatively safe. Like I said, find people with skin in the game. One of the places that I like that is not necessarily. I'll get to what I think are one of the safer places to put your money if you're a smaller trader. And any questions? 877-927-6648.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Pattern patterns, profits, and peace of mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I'm just going to give you my 2 cents worth for those of you that have, smaller accounts. If you've got larger accounts, you're most probably protected, up to $250,000 through the SIPC, but, this has to be rectified, what's happening with MF Global, but I'm sure it will be. It's a small drop in the bucket. They have to put the confidence back, and it'll be okay. Interactive Brokers, I do not trade there. I know people that do. I know some of the people behind the firm. They have very good risk control. They have a pretty good platform. You can trade almost anything, and it looks okay as far as near as I can tell, but I can't make any guarantees. That's all I'm saying. All I know is if you're trading with someone like Rosenthal Collins, R.J. O'Brien, people like that, I know those people. They're not going to let anything, bad happen to you. They're more concerned, on the return of your money than the return on your money. So they treat you very, very fairly. I've been around for a long, long time. Many of these firms have been, absorbed by Refco. Back in 2005, Refco went under for doing the same types of things that, MF Global did, but they didn't go into segregated funds. They just, blew out the company's capital. But it took a long time for some of these funds to be transferred to other firms, and you don't want to go through that. That's just, not where it's at. Now we need to talk about the gold and silver market, folks, because we have been watching it for quite a while. We've been talking about the fact that the gold and the silver, the open interest, has been declining rapidly for a great deal of time. And the silver market can't even take out the December highs, although we did that in the gold market very easily. And the reason why it can't do it, folks, and why we have lower tops and lower bottoms is the fact that, we don't have any new players coming in. The open interest is decreasing, the volume is decreasing, and that's what's causing the problem. If we had players coming in, we would be able to, get this thing turning to the upside, but that is not, in fact, what is occurring. Now, on the show, last Thursday show with the gold and the silver, we talked about silver at the price of $29, and I believe it was 80 some cents an ounce is what we're looking at for a potential buy, and we will still be looking at $29.83 is what we're looking at for a potential buy, in the silver market. But we need to wait on that, because if it gets down there too fast or with a big wide-ranging bar, we don't want to take that risk. That's not an easy trade like the bond trade. That's my opinion, of course, but that's what we're looking at. The gold market has done the same thing. The gold market has been a little bit stronger, than the silver market, but it, in fact, has had a tremendous run, from 600 up to 1900, and then we backed off over $350 an ounce, and we were able to rally back, to the 618 retracement, and that's all we've been doing. We've been making these same things. Now, last night we went up to the 786 retracement, and when sold off more than $30 an ounce, and had every chance in the world to just go screaming through there up above 1800, but it's running into a lot of selling, and the reason for that is the same reason that we're having in the silver market, and that is because we don't have new players coming in. This was the tip-off of when the market was topping on April the 25th in silver. We spent a great deal of time. Tom did, so did Steve Rhodes and myself, talking about the open interest and the volume, of what was happening with these parabolic moves, and now the people that are still in these things are suffering a bit. And we hope to end your suffering on some of these things if you'll just pay attention and at least put a stop in on some of these things. If you'll remember, we said once the silver broke that $33 per ounce level, that was going to be a real serious thing, and we went down to $30.50, and then we rallied right back to 33 again, touching that same number, and then it's sold off another $2 an ounce. So silver's moving 5%. In a day without even, batting an eye. So there's tremendous volatility in the silver and gold, but that's not a good thing for investors. That's a good thing for traders. And that's the big difference here, is that we're trying to trade some of these markets as opposed to, buying them. It's easy to buy silver when it's $14 an ounce and it's stayed there for a year and a half and, hasn't gone down. That's an easy thing to do. But when it's swinging in 5 and 6% at a time, it's more difficult, to become an investor. And that's what's really, what we have now is we have these volatile trading markets. And it's also giving some headaches to, some of the hedge funds. But in fact, this is the type of thing that we're looking for, when we're following, some of these markets. So I want to spend just a small amount of time here on the stock market because I want to end it with a couple of the commodity things that we're looking at, because they're getting hit really badly in some of these things like corn and wheat and a few others that look like they're ready to break down. And whether this is all interrelated or not with money, I'm not 100% sure, but we need to keep an eye on that. But one way to play this market to the downside, if you want to get interested in it, is using the SDS, which is the double weighted short account for the S&P 500. Now, what's interesting about this is still at a very very, very low level. And if my suggestion will be, and this would be what I will be doing for for the trade on Friday here, is to just buy the SDS on the close on Friday, and what you're going to risk is below that low of last week. So you're going to be risking about 2 points. It could gap below it, but we'll wait and see. We've got a caller from Mike. Are you there?
Yeah, I'm here.
What can I do for you?
Yeah, I'd like to talk to you. I'm not sure. I've been listening, but I'm not sure I understood you properly. Are you thinking that silver is peaking and is getting ready to go down, or it's basically getting ready to go up?
Oh, it's already peaked a long time ago, and we've had these 3 different tops. You know, that's the main thing that has been going on. What we have now is we have a situation where silver, you know, has a price objective of $29.83. I believe that's the exact price that we've been watching for quite some time. I'm going to put that into the Tiger TV so you'll be able to take a look at it. But, you know, this week's high in silver was exact 618, Mike. So I think we're coming down to the at least the 29.83 level. Stay with me,
sure,
and we'll talk a little bit more about it because there's a couple caveats here about buying silver there.
All right.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just 1, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Go long America. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before December 31st. You will receive in excess of $300 in trading education. Now, back to the Futures Hour.
Okay, we're back, folks. Are you still there, Mike?
Yeah, I'm still here. Good.
Okay, the reason why I am, have been bearish silver for a while is, we've had these lower tops, all the time, and the last major one we had was a 50% retracement, from the 49 level down to 26, then we rallied back exactly 50%, and then all of the others, the other highs that we've had have been lower, all along, and each of the bottoms have been exactly 61%. Up until this last week when they've broken down to the 786 level. So that means that what's happening now is we're breaking the 786 level, and that means it's going to take us down to the much larger swing, which comes in at that 2980 level per ounce. So that's what I'm looking at. And with the probability of lower prices here, it looks like it could certainly make that. It's only $2 away now, which is nothing.
Okay, because I've got a very small short position via the ZSL, which is the triple negative.
Now, here's how I would handle this, because if you get through 2980, we have a big wide-ranging bar today, but if you get another wide-ranging bar to get there, like Monday or Tuesday, you have a really bad day in silver or gold, I would not liquidate my position there, because that tells you that the market wants to give you a lot more.
Okay.
You know what I mean? If it takes several days to get down there.
I understand. It's going to probably be predicting that there's going to be a pretty bad recession in Europe, and silver's been trading more as an industrial metal as opposed to an inflation hedge. So.
Absolutely. So that's the way I would handle that. So that's my opinion, of course, but it makes sense, because if it gets through there too quickly, the market wants to give you a lot more. That's basically the thing that we're waiting to see.
All right, that's great info. I know you're near the end of your show. Do you have another caller? Or?
No, I don't. You're it. So you have another question?
I'd like to ask
you
about
two
the
for
TBT.
one.
I've been trying to get into TBT, but I've been waiting. I've been actually trying to do it by selling a put like 18. Where would you think the TBT would go down to if we get to around 150 that you and Tom have been talking about? For the
around $17, $17 a share is what I'm looking at.
That's around 17. Okay,
yeah.
That's what I wanted to ask. Thank you very much for the information. Have a good day.
Okay, thank you for calling in, Mike. I appreciate it. Now, the last thing we want to look at, folks, is the crude oil market, because, we've had that big rally that went up to the 707 level that we had a little discussion about, the fact that it's an unusual Fibonacci number. It doesn't hit it very often, but that's just what's happening. And if you'll take a look at the Tiger TV, the last time we've had moves like this, the market corrected about $15 a barrel, and that would take us down to pretty close to that $92 a barrel. It could even go down to the $87.50 a barrel, where it would probably offer some good value if that is in fact the case. So the things that I'm not on again until Monday, and by then the whole world might have changed, but frankly it might not. There'll probably be there's one or two things: either nothing's going to happen or all hell is going to break loose. So I'm betting on all hell is going to break loose. So I recommend buying the SDS on the close with a $2 stop. Try to get the bonds. If you get that big move up into that 150 area, just buy the TBT. It'll be somewhere under 18 would be my guess, and I'd use a $3 stop on that. And those are the ones that I'd be watching, coming into the this big weekend that we have. It is the lunar eclipse. It is a full moon, and so we're going to have a lot of volatility. I wouldn't be surprised if we did pretty much the same thing to the opposite of what we did on the 25th of November. In fact, the best thing for us is if the market, if you're short, is have it rally really strong on Friday. That would be the ideal situation in stocks to get even a better price. So that's it. Everybody have a wonderful weekend. Always use stops and good money management, and may God bless.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first